So we know that you're a price action trader, so I'm not going to ask you for long-term forecasts, but I would like to ask you a little bit about the beginning of your journey before you found a simple method that was consistently profitable for you. What did you have to go through?
Well, I've been trading for about going on my 16th year, actually. But before that, I was a longer-term trader. I would hold positions overnight and sometimes week-long positions. And through the 2008 crash, I pretty much devastated my accounts and devastated myself financially. So I went back to the drawing board. I tried to trade longer term, and what I found was, for me personally, the risk was just too monumental to hold positions overnight, not only financially but emotionally. So
Okay.
I decided to start working on the 15-minute chart about 5 years ago, and that's how I came up with this Price Action Traders Institute, which
Right.
teaches traders how to go in and out of the market during a session and be flat at the end of a session.
You know, know thyself, right, Kim? And
Yeah,
you know, and I've interviewed. Let's face it, Jack Schwager has talked to the best, right? Wrote Market
yeah.
Wizards, and one of his points is find a trading style that fits your personality. And sometimes we have to get hit in the head with a hammer a few times until we find that. So you sleep like a baby at night. You don't have to worry about what's happening overseas. I know one of the worst feelings people get is they go to sleep with a nice position and wake up and they've been taken out, or they didn't put a stop in. So I understand that. But while you were going through the process to find the method that you use now,
Mm-hmm.
what was that process? What was that process like, finding a short-term price action strategy that you found? Did you do a lot of back testing with different strategies, or were you just? How did you come upon your method? I'm sure it didn't happen right out of the blue initially. That it was a process.
You're absolutely right. It was a process. One of the things that I was in a traders forum, a traders chat room called Black Dogs out of the UK, and there was a guy in there from Belgium who kind of took me under his wing, and he said, wow, you're a really good trader. Why are you using all these indicators? So he was the first one that kind of took me aside and said, I'd like to work with you, and I'd like to show you just how to use a chart, a short-term chart with no indicators. Well, at first, that was, as you can imagine, I was very indicator dependent. It was very difficult for me to make that switch to like removing indicators. In fact, it took, I want to say, 6 to 12 months to really become indicator free. So I trade with nothing on my charts except for price.
You
And
know,
he was
that's
the
a
one
great
that taught me
story,
that.
Kim. Yeah, that's a great story. So, you know, providence, luck, whatever you want to call it,
Yeah,
someone else paid it forward, took an interest in you to show you the way. And, you know, a lot of people don't have a break like that. I mean, that's what I try and
yeah,
create here in LAR. You know, people will take others under their wing and work with them and teach them, because really, you know, that guy probably didn't charge you a penny, because have you ever noticed what good is anything until you share it with another? So
that's absolutely true.
you caught a great break with that guy, and
Yeah,
you know, it's a good story, and it says that, you know, we need people, right? You know, we live in
absolutely.
a world where everyone takes great pride on being independent. Oh, I'm an
Hmm.
independent woman. I'm an independent man. When really, there's nothing wrong with being dependent upon others that could raise your level and teach you things and have an open mind. That for me was a process. I only
Yeah,
used to want. I only wanted to know what people were doing in my youth, so I could take the other side of the trade. And I learn every day from people. So you had a mentor,
yep.
and now you trade. with no indicators. Do you know what the number one rule for naked trading is?
No, I don't.
Keep your shades drawn.
Yep.
Especially up there in Northern California, Kim. That's my advice. So maybe maybe we could take a look at your charts and see what they
Yeah.
look like. If you have you used Hangout before?
No, I have not. I'm
Okay,
kind of
so
new at
if you
this.
just move your cursor up to the left-hand side, you'll
Yep.
see a green box with an arrow,
Yep, I see it.
and you click that, and then different desktops will come up,
Okay.
uh, and then you click the one you want to show and start, and a picture speaks 1,000 words.
Okay, I think this is the one. And then I go share. Let's see if that's the
Right?
right one.
Okay, it came up for a sec. It
Where did it
flashed.
go?
I don't know. Try it again, please. 'Cause I saw an image of a chart for a second, and then it disappeared into.
It shows on my end that it's showing. In
Okay,
fact, my
look.
tweets are coming up.
I still see you and your pup. Let me see if
Oh,
others can
should
see
I
it.
try it again? Oh,
Yeah,
whoops.
try it again.
Okay,
Just
let's
like
try
trading,
this.
you try again.
Share.
I also talk about, Kim, you can't learn experience. There, we've got it. It only comes with the passing of time and living through things and screen
Yep.
time. And I think that was also a nugget that it took you 6 to 12 months to get used to this style. So you had to put in the time, the screen time. Um, you couldn't just be taught and automatically feel comfortable with something. You had to work with it. So we're looking at EU here. I assume it's a
Yeah.
15-minute time frame.
Yep.
Why don't you walk us through some of the things that you see and that you teach?
Sure. So for the New York session traders, which I handle the New York session trade planning for my members, and then I have a guy in Australia, Cam, who handles London session traders. So we cover both traders. So
Yes.
for New York session traders this morning, what I do is I go like this. I say, what did price do overnight? I have three questions I ask myself. What did price do overnight? Where is price now? And what do I need to see price do in order for me to execute a trade? This morning we had the euro dollar in a nice clear directional move to the downside, what we call a CDM. So we are looking for pullbacks to get into this trade. And how we look for pullbacks are what I call a yellow line. We had a yellow line entry and a re-entry right here for a short this morning for members in the room, and you can see that trade has come nicely off that line. What we're looking for this morning is, or what I'm looking for, is for these lows to give way at 71 for a drop down into 50 this morning, so into 1050 on the euro. Now, the risk that I tell my traders is we use very tight stops, but the risk coming into a clear directional move, meaning we can see the direction from overnight, is that we just
Right.
get sideways chop going into the close. So
Okay.
that's what it's really a simple three-step question.
Okay,
That
and the
we,
question is, what happened last night? What's happening now? And
yep,
what do I need to see for
price
me
do,
to,
yep.
huh?
Yeah, what do I need to see price do in order for
Oh,
me to execute a trade?
yeah, something compelling, a signal to take action and assume risk.
Yeah,
Okay.
and so, for instance, also on the, let's look at the pound dollar, because I think this is another good example of how we trade. So in this morning in the room, our analysis was the pound was ranging and then finally made a nice break to the upside, had some pullbacks. We, as New York session traders, were looking for a pullback into this where this yellow line is, and I'm actually long this pair right now from 34, from 43.34. So we
Okay.
are looking for price to accelerate back up towards these highs at 93, pop through the highs for a move into 4,400. maybe start to accelerate as price comes through 00 for a move into 44.20 this morning.
Okay.
So
So
pretty simple.
how did you determine that yellow line where you bought it? That was breaking through a daily high and retracing through to a daily high?
Yeah, what we do is we start to yellow line trade. So for instance, there was a yellow line right here at the low of this candle. So let me just draw that so you see what I'm talking about. So there was a yellow line trade right here,
Yeah.
which was a stop out. We use a 10 pip stop on the pound dollar. So the low was 52. Traders would look for a re-entry down at what we call the next level at
Okay.
20. So that's how
Okay.
we determine. And as long as price does not come back down into this range, which the GJ did this morning, the pound yen,
Right.
we're safe with taking trades on one pullback after a stop out. And I have a whole, list of rules that guides traders for re-entries on these trades, how to first
Okay.
get in their first position, how to re-enter after a stop out,
How
etc.
about after a trade starts moving your way and you have a 10-point stop? Are you in the camp that you want to pull the stop up at least to break even to protect the trade, or do you leave it there?
Well, I teach, first off, traders will trade between levels, what I'll call. So if a trader got in a position at, say, 50, at the price
Mhm.
50, they're looking for a move up into 80 if they're going long. So what I teach them is really once the trade gets 25 pips in profit, if it hasn't hit your level yet, then you want to go ahead and move it up to lock in about 5 just to cover your costs on the position.
Okay.
But I don't move my stop until I get personally up 25 pips
Okay.
in profit.
And then you move it to cover your costs above entry.
Yes. Yeah,
What
so I
do you ever
basically,
recommend?
go
Do you
ahead.
ever recommend doing multiples and taking partial profits before targets?
I used to recommend taking multiples, like adding on to a position, but I don't do that anymore. I just go in and I, recommend my personal trading risk is I trade at 0.5% risk on any one position.
Okay.
And I recommend between 1/4 and 0.5%. That way with tight stops, with low risk, even with I'll be able to handle 6 open positions at one time, that I'm never at risk for more than 3% across any trades if they all go against me. So I used to recommend adding on to positions, but because of FIFO, it just became too cumbersome for US traders and for me to actually teach traders how to manage those positions, that I found that the simpler I keep it, the easier it is for people to get into profitability. And so
Yeah,
don't
that's
teach
a
that.
good point about FIFO, because
Yeah,
you have to come out of your first position.
that's
And
right. You
where you may
can't.
want to
So
take off your add-on, but you can't. So
that's
it
right.
can be confusing.
It's really confusing to teach traders that. I mean, I could do it myself, but I don't even do, and I used to do it, but I just don't even do it myself anymore. So not only was it cumbersome to teach, but it just became cumbersome to actually trade that way for me mentally. So I don't do it. The other thing you asked me was, do I guess, scale out essentially or take partials?
Yeah, yeah.
I don't teach that. I know some of my members do that, but my thought, and it's just my opinion, is that if I'm going to take on the full risk at the moment I enter a trade, I I don't want to take partials, because even though that might offset the risk, I'm willing to take a full hit on a loss, but I'm not willing to go full board on the win possibly. So I don't do that. I just go in and it either is a win or it's a loss for me.
Fair enough. So if you're going to take the risk, why not ride it to full potential?
Yeah,
I
absolutely.
get, I get it. Any other methods that you kind of share with us without giving away the store? certain
Yeah.
things that you've noticed. Okay,
Yeah,
here we're
let's
on
look
the
at the
Aussie.
Australian dollar. This morning we came on, and this is what we saw. We saw that, the employment numbers came out last night, which stunk.
Yeah,
And this was the price action overnight. It's in a range. It really,
yeah,
the pair has not committed yet either
right,
direction.
right.
So we
Is that a
look at,
non-trade or you trade
yeah,
ranges?
it's a non-trade. So this is what I do. I say no trades inside of the range. Traders,
Okay,
we're
yeah,
we're looking for a break either to the downside to get into this guy, or we're going to wait for a break to the upside.
okay.
So
Great discipline because a lot of people might have a bias and try and anticipate it, and no one
yeah,
knows. In fact, both could happen, one first and then the next.
and it frequently does, Dale. So sometimes we'll see, what they call a false break, right? It might break to the downside,
Yeah,
turn right around on us, and whip right back inside the range. And so then we say, okay, you get stopped out. You lost 10 pips because we take a 10 pip stop on this. Now it comes back in the range. Or if price closes back in the range, like within that same candle or the next couple candles after the break,
yeah.
and you're only down, say, 4 pips or 5 pips, I have traders exit those trades.
Okay.
So if we get a close back in the range and the pair just doesn't make a drop or a rise, we want to exit that. It's real
Right, because
simple.
the contingency of a breakdown is negated. Why stay with it?
Yeah, that's right. And why go to full stop if, you've got a close, it's not really moving. Go find some other opportunity that may, come to fruition for you.
So is it the same formula in Aussie as it is in pound? That for the most part your average risk is 10 pips, looking for 30, and is that your R to
Yeah,
R qualification? You're not going to take trades unless you have a 3-to-1 profit risk ratio potential.
yeah, at least 2 to 1, but most of the trades are 3 to 1. We do use a 12 pip stop. That's our highest stop, which would be on the crosses like the pound yen, the ECAD, any of the other crosses. But most of them are at 10. The only one we use an 8 pip stop on is the euro dollar because
Okay.
we've got a pretty tight spread on that. Most traders do. So yeah, it's 8 on the low end with an average of 10 pip stop and 12 on the crosses because of the
Okay. For
spreads.
for new traders, Kim, that are
Hmm.
learning your method, a lot of people will start off on a demo. I used to recommend, demo trade for 6 months or so, but I've come to the
Hmm.
conclusion that people do not take demos seriously because it doesn't mean anything. And now I'm
Hmm.
recommending to people that they trade micro lots, so at least they have the experience of having a little skin in the game and the emotionalism of having money on the line, and they seem to take it more seriously. What do you recommend when people come in to learn from you and want to go live right away? What do you tell them?
Well, I would have to say I'm 100% in alignment with what you're telling traders because, as you know, because you're a very experienced trader as well, that the mental aspect of trading is more important than actually learning the technicals. Like I tell traders, look, even if you're brand new, you can learn the technicals of what I teach simply within 6 to 9 months if you're new. If you're an experienced trader, you'll probably have this down in less than 3 months. It's that simple. But where it becomes a challenge for traders, as you know, is the mental. Can I sit and wait, like for the AU, for instance? Can I sit here
Yeah,
and wait for a break? Can I, like yesterday, I don't know if you remember yesterday in the New York session, but there was no trades for us. I mean, it was highly unusual. I had no trade open positions the first hour after the open. And I kept
yeah,
being, I was on Twitter just going, let's wait. There may be an opportunity. And boy, was there opportunities yesterday. The AU was one of them on a big break to the upside. So the
yeah.
mental
I, I
aspect,
play I play Tom Petty's song "The Waiting Is the Hardest Part." Uh,
yeah.
Earlier in your career of teaching people, and I've moderated trading rooms where I was a lead trader. I used to feel the pressure to create trades to so that people wouldn't be bored, and it took a long time for me to be able to say I don't know,
Yep.
or I'm not, or I was wrong, or I'm not going to do anything until I see something. So you're right. That is the hardest part. FOMO. People afraid of missing out.
Yep. That's right.
I tweeted today. Kim, I don't know if you agree with me, but it doesn't show up in your account balance or the ledger. But I believe avoiding bad trades is more important than being in good trades.
Yeah. Yeah, and I
So
also, yeah, I would agree with that. I just say, it's more important to do the right thing instead of having to be right. So as long as you can take a trade that's based on criteria, which we have, pretty
right,
standard criteria for the type of trading we do, as long as you can look at yourself in the mirror at the end of the day, win or lose, and if you've had a losing day and you can look back over all your trades and say, hey, every one of these trades I took based on criteria, they
yes,
didn't work out. I feel good about myself. I did the right thing.
right, yeah, right. Discipline. Yeah. So
Yeah,
do
it's
you
like
recommend
trading.
people? Keep a journal so that they're
Absolutely.
aware? They're aware of what they're doing right and they can repeat it, and aware of what they're doing wrong and avoid it.
Absolutely. In fact, that's one of the big things. I keep a journal. I've put, pictures of my journal out on Twitter. I've given members my journal, and I do it by hand. I'm very hands-on. I believe in the, brain hand writing connection because I can print out my
NLP
log.
stuff.
Yeah.
In the old days, I know I'm much older than you. I used to do all my charts by hand. And, there's something about the what happens in imprints in the memory when you do
Mhm.
it by hand. It was an adjustment for me to just have it easy and have the, computer do it all for me. I'm
Yeah.
a big believer in writing things down. I have all kinds of things written around my desk. It's okay to miss a trade. There's always another trade around the corner.
Mhm.
Things like that. Reduce leverage, use wider stops. All kinds of things that we have to remind ourselves. Also, creating a new paradigm. Like you say, trading is psychology, psychology, psychology.
Yep.
Do you recommend to your mentees that they surround themselves with powerful positive images of where they want to be and imprint that on them? So, I'll have people come in to LAR with handles that are just I have to comment like lousy trader,
Oh my God.
newbie, yeah,
Yeah.
where they think it's funny,
Yeah.
but what they're doing is they're prophesizing their future. And what you
Oh
say about
gosh.
yourself, what you say about yourself
Yeah.
is what will manifest. So, you ever get into that with people that have negative attitudes and talk to
Yeah.
them? Yeah, what kind of advice do you give people
Yeah.
when they're like that?
Absolutely. I mean, really, I agree. I agree with what you said too. Like, just even like calling yourself stupid or any of that, it's programming your subconscious mind, and then you're going to
Right.
actually act that out. You're going to act it
Yes.
out on a trade. You're going to act it out on, not keeping your stop in place, moving your stop. You'll do blow up type things. And yeah,
Yeah.
I absolutely say it's all in your perception of how you see yourself. And we've talked about even, like, I've had webinars just on self efficacy and your self esteem and
Yeah.
how you view
Nathaniel,
yourself as a
Nathaniel
trader.
Brandon stuff, and more
Yeah.
recently Robert Proctor stuff.
Yeah, exactly. In fact, over
So,
the Christmas break, we went
yeah,
into mindset training. That's what I gave them to do over the Christmas break when we didn't trade. Was like, let's get your mind in shape here.
great stuff. So, you and I are kindred spirits, and that's part of being a coach. And you are. Do people call you Coach Kim? I
Yes, they
get that
do.
coach. I get that coach thing. At first it made me feel old. Because I considered myself a player. So now I'm a player coach, but
Hmm.
it's really the highest compliment someone could pay to you. A trading coach, a life coach, because you're really having an impact on their lives. This is a question that I get a lot. I'm sure you get it too. People that take your course, after the Great Recession, a lot of jobs didn't come back, and people were tired of relying upon brokers to who blew it for them in 2000 and blew it for them in 2008, and they wanted to learn how to do it so they were self-directed, and that if anything went wrong, it wasn't because someone else did it to them, it was their own mistake. So
Hmm.
I get this question a lot because a lot of people want to turn this into a career, and this is a question. Dale, what size of an account do I need to trade for a living? And you and I live on the West Coast. Cost of living is pretty high. What do you tell people when they ask you that? And do you get that question a lot?
I don't get that question a lot, but I have gotten that question, and the answer is really you do have to have somewhat of a substantial account, because if you're risking, 0.5% to 1/4% on a trade, and not only do you have to have somewhat of a substantial account, and by that I mean you have to have like at least 100,000, and it depends, like you said, where you live. California, we pay like premium to be here. But
Right.
if you're from the Midwest or somewhere like that where cost of living is a lot lower, but I also tell traders, do not put all your funds in one brokerage account. So spread it out over two, maybe three if you can.
Be, because of the risk of failure of
Yeah.
a firm.
Yes,
Okay, that's
yes.
good. That's good
Yeah.
advice too. And do you tell them to make sure that their regulators are outside of Cyprus?
Yeah, absolutely.
Okay.
Hey, and
So
even
no,
the
but
US regulators I wonder about sometimes.
yeah,
So,
yeah. So what I say, the average account, 10,000. When people ask me, Dale, can I trade for a living with a $10,000
no.
account? I say yes if you want to live beneath an underpass. And and
Yeah.
yeah, so here's a great example. Rich Dennis. You remember the name, right?
Yeah, oh yeah.
He was a
Well,
legend. He was a
yeah.
legend. He taught the turtles. The turtles all became multi-zillionaires, most of them
Yep.
themselves. But you know what? Rich Dennis had a brokerage firm, C&D Commodities. So
Mhm.
I tell people that you're going to trade better if you have more than one revenue stream. That if trading
Mhm.
is your only revenue stream, that puts more psychological pressure on you, that every trade becomes more like life and death instead of just another trade.
Totally.
What do you think about that?
Absolutely. I think that becomes so much of a pressure. It's like I say to traders, it's like trading with a gun to your head. And it's not an easy thing to do for anyone, no matter how experienced you are. The moment that trade starts to go against you and you feel like, oh my God, I'm in a drawdown this month. I got one trading day left to make my rent or food on the table. You're not going to be
Yeah,
able to do it. You're
yeah.
just not. I
So
don't care what
Kim,
anyone says.
it was great talking philosophy, and I tweeted that about what you do is the beauty of simplicity,
Yeah.
and you,
Thank
you
you.
demonstrated that to us today. If you'd like to show your website or how people could contact you to get involved with you, this would be the time to do so.
Well, since I'm not too adept at showing this, but you can go to priceactiontradersinstitute.com,
Okay.
and that's where you can find out a little bit more about me and about Cam, who runs the London session for me.
Okay.
and find out about kind of what we do and, being part of our membership. So Price Action Traders Institute, it's a mouthful.com.
Yes. And your Twitter handle is similar. It's at Price Action Kim, correct?
Yes, that's right, Dale. Yeah.
So, Kim, it was great talking to you again. I know it's February, but Happy New Year to you, and I hope that pips rain down on you and all the people that you teach throughout the year. Great work and a great service you're doing to, in a very important way, give people the reality of the business instead of all the hype that people find on the internet. Congratulations to you, and I'd be happy to call you my trading warrior sister.
Dale, thanks a lot for asking me back, and I appreciate talking to your group, and you do a great service, I know, for traders every day, so kudos to you, and Happy New Year to you as well, Dale.
Thank you, Kim. Good hunting, my friend, and everyone thank Kim for her time. Ron
Thanks,
thanks
guys and
you,
gals.
Kevin. Everyone thanks you, Kim. So good hunting, and please keep in touch, and I look forward to seeing your tweets on Twitter, and think that if people feel that their trading style is not an overnight position swing trading mentality, to check out Kim Krompass. That's my recommendation.